Welcome to CEO Money. I'm Michael Yorba. I have Levi King, CEO and co-founder of NAV, on the show with me today. All right, Levi, welcome to the show.
Thanks for having me. Appreciate it.
Where did you get the idea for starting NAV?
So my previous company is a company called Lendio, and it's a business loan broker marketplace. So we helped thousands of small businesses get financing. There were many more that we couldn't help get financing. And in this example, I'm talking about traditional, I want a loan from a bank or from an alternative small business lender, but not the types of people that go and raise venture capital, but they've got a retail shop, they're a plumber, just true small business America. And for every one person, one small business owner that could get a loan they were happy with, there was 99 others that either couldn't get anything or didn't like their options, and they were begging for answers. And so there was no platform a small business owner could go to and quickly and easily understand the data sets that third parties use to make risk-based decisions on their business. And that's personal credit, it's business credit, it's their checking account data, etc. So I left and co-founded this with my business partner as an attorney, and we had kind of hatched this idea together to be Credit Karma for small business. And so we help them understand, improve, and take advantage of their data over the life of their business to leverage it. And that came from seeing the need at Lendio, but also prior to that, I was a small business owner 5 times over. Started with a manufacturing company, manufactured electric signs, awnings, and neon, sold that, and owned a hotel. I owned a string of franchises in the restaurant industry, retail financial services business for people that speak Spanish with some retail locations, and then a boring sales and marketing outsource company that was actually the most successful financially of all of them. And so I got about 30 different commercial loans over time, a couple SBA loans, equipment lease, kind of the gamut of small business financing. And it was just brutal to understand it industry to industry. It changes so much how your credit and financial data apply to you and what your options are. So it's kind of my whole career led up to this company.
Tell me how NAV.com differs from any other online business lender or marketplace.
So if you go to Credit Karma, you can get great advice. You can see your consumer data. You can get educated on it. You can approve it, and you can see contextual offers based on your credit. But you can't see contextual offers based on your business credit because Credit Karma doesn't have business credit. And that's true of all the consumer offers out there, Credit Sesame and the credit bureaus themselves. You can't go to Experian, even though they have personal and business credit data. You can't go sign up for an experience that's for a small business owner that includes all of the data that impacts you. You can't go to any of the bureaus and get the other bureaus' data, the commercial data, like you can in the consumer space. If you go to Experian, Equifax, or TransUnion directly, you can sign up for their credit education product and get the other 2 bureaus' credit data, but you can't do that in commercial. So we're the only place you can go to understand your personal credit with your business credit, to understand multiple business credit data sets and scores, and to understand all of that as it relates to your cash flow, because we bring in the checking account data as well.
Okay. And business credit scores different from personal ones. We know that, but break that down for us, for those who don't know.
Yeah, so the scales are different, the numerical scales. There's consistency in the consumer space because either, most lenders use FICO, and if they don't, they're usually using the Vantage, which the 3 bureaus have cooperated on. So they're just really high consistency. So what your score at Experian means is going to be very similar to the score you get through another bureau, and it's going to mean the same thing. Whereas in the business space, depending on the score you're looking at, you've got Experian's IntelliScore that's a scale of 0 to 100. Equifax's is hundreds and hundreds, and so it's a lot different to compare apples to apples. And then the FICO score is designed to predict one thing, and a lot of people don't realize this, and it's the likelihood of a 90-day default within the next 2 years. That's all it predicts, and that's not what business scores predict. They predict risk and default and things like that. But they don't specifically predict, is there a 90-day default risk within the next 2 years?
Got it. Trends you're expecting, what do you expect to see going forward now that you're right in the heart of it?
I think, so kind of speak to 2 different trends. I think one is, I think we're just barely on the front side of true transparency and rights for small business owners as it relates to financing and credit. You've got California that we were an important sponsor of getting through the Assembly and Senate a bill that requires more transparent, very transparent disclosure of costs on small business financing. And there was a lot of opposition to that bill. It's waiting for the governor's signature, but we anticipate it will be signed. And there's already one other state that's reached out and said, hey, we think we want to do this. But I think, in the consumer space, whether it's financing or what Facebook does with our data, transparency is a topic that we think will only become more and more important. And we think that applies to small business financing and credit options. So I believe that's a trend. Other people will probably argue one state taking action isn't a trend. It's an event, but I think it's the start of a trend. And then if you switch kind of the question in a totally different direction on a different topic, we've in the last 5 to 10 years, we've seen lots of examples where small businesses and consumers are approved for financing before they apply for financing, which kind of turns the whole thing on its head. And some of the more obvious examples are PayPal's working loan product, where you're already a PayPal customer, you process through PayPal, there's enough data for them to make a risk-based decision on a loan amount up to X. If they had other data sets, they could go above X or be more flexibility in the payback terms. So they are constrained to what they can see, but it's a tremendous product. Another example, Square, that's doing something similar. If you're not approved for the Square Capital loan, you can't even see it. You can't apply for it. And so if we think more broadly, at NAV, we're the first place that it isn't a customer with our data set where they're transacting. Instead, we're bringing in other data sets. And now with 3 lenders, you're either approved before you apply for the financing. And that hasn't happened in a third-party ecosystem ever. But I think that's a trend. I think both in consumer and small business, the data already exists somewhere. It lives and breathes somewhere. And I think we'll continue to see people approve for financing before they apply. And I think we're really early in that. It could take another 2-3 decades, but banks will do it. I bank at US Bank. You can soft monitor my credit, and you see how much money I have going in and out. And there's US Bank just was the first major bank to launch just last week the ability to underwrite up to $250,000 same day. But it's still reactive. You still have to raise your hand and say, hey, I want this, versus we already have all the data. Why don't we just tell this person, hey, good news, if you need $100,000, click this button. And they're the first bank to do it. So I think we're a long ways away still, but I think we're getting some steam and momentum on that. I think like my kids, when they're grown-ups, if we tell them, yeah, back in the day, you had to go into a mortgage broker or you had to go into XYZ, I don't think they'll be able to wrap their mind around that. It's just like my kids trying to explain to them when I got married and we were traveling across the country, we bought the cutting edge version of Trips and Maps and had to get an AC adapter for the car so we could keep the laptop on. And that was cutting edge and crazy, and it was on a CD-ROM. And so they just can't even comprehend things like that. But I think the same thing will be true of applying for financing. Even for a mortgage, there's enough data out there to know what are you qualified for, and is this house worth that much money? It all already exists in different places. And so even a mortgage, I think in the future will be, you're approved to buy that house, whether or not you want to buy it, you could.
Got it. All right. Any business lessons for the entrepreneurs out there that are looking to follow up behind you?
Yeah, I'd say, so the biggest, it's kind of a Leviism, but the biggest piece of advice I have for entrepreneurs is to be authentic to the point of consistent vulnerability. I think we all, especially entrepreneurs, feel pressure to pretend to be someone you're not. And what that does is it comes with a very steep tax, an emotional tax, a psychological tax, which leaves you with less to give back to your business and your employees and your customers. So when you're authentic, it gives everybody else in the organization to be authentic. Then they have permission. They don't have to play games either. And then you don't have anyone in the company that's spending an emotional and psychological tax on something that doesn't matter, which is inauthenticity. And so it brings the team tighter together because people feel like they can trust each other. It makes the team more forgiving because if I'm authentic about where I suck and I'm not, where I'm good, where I'm bad, and guess what? I'm not even going to work on the stuff that I'm not good at. I'm just got to tolerate terrible because I'm not wired for it. But I give that back to them as well. And so I think it creates a lot tighter teams and teams that can move faster and give more. But it took me 10 years to learn that I could just be comfortable being myself despite all the flaws that I have.
Okay. Good advice. I understand. All right. Levi, thanks for being a guest on the show.
You bet. Thanks for having me.
My pleasure. You've been watching CEO Money with Michael Yorba. Thanks for watching. Don't forget, like us on Facebook, follow us on Twitter, and subscribe to our YouTube channel.